the PBOC could easily have acquired as much as 20,000 tons. It was at that point that the PBOC set up the Shanghai Gold Exchange, which is controlled by the PBOC, incidentally, so it's within the mandate of that original legislation in 1983, and allowed Chinese citizens for themselves to acquire gold. Now, when it comes to silver, it's a different situation. You didn't have a clearly a clear bear market, if you like, in the way we had in gold. Silver even then was behaving somewhat differently from gold as a monetary metal. But there is no doubt in my mind that there was a second program at the People's Bank of China to acquire silver reserves, if you like, which would be, like the gold reserves.
In today's news recap, gold weekly price outlook. Gold has a tough week. The gold market continues to see a lot of noisy trading as the markets are trying to determine whether or not the trend can continue. Gold is currently struggling, but it is still strong from a longer-term standpoint. The gold market has been a very negative market during the last several trading sessions, and now it looks like we have formed a bearish engulfing candlestick. There is a trend line that coincides quite nicely with the $2,800 level. So we may have a week or two of general softness in the gold market, but when you look at the longer term chart, it does make a certain amount of sense considering just how noisy things have been. Now, this past week is a little bit difficult to get a read on, though, because quite frankly, a lot of what could be going on is simple liquidation so that traders can cover other positions that have been absolutely crushed. If that's the case, then I do think gold recovers rather quickly. I will be watching the $2,800 level because it was the recent swing high, and on the daily chart, it shows the 50-day EMA as well, and a lot of noise. So I'd be very interested to see how gold behaves there. This is an ugly candlestick, but again, you have to keep it in perspective. This is a market that's basically gone straight up in the air since roughly September 2022. It's been a massive performer. So ultimately, I think this is a dip that will set up for a nice buying opportunity given enough time, but we have to wait to see when that is. Be patient. Take your time. Don't try to front run the move because quite frankly, we don't know when the pullback ends. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
The Dory would be shipped off to nobody knew where, and also the mining company got paid for it. So you've got three parties in this. You got the assessor, you got a bank, and you've also got the refiner. Now, in those days, and I think it's probably still generally true now, because refining silver, smelting it, refining, and all the rest of it is a pretty, I suppose, environmentally unfriendly business. And it's quite energy intensive and so on and so forth. The Chinese were by far the cheapest and most ready refiners of silver. So all this Dory was getting shipped over to China in order to be refined. So and not only that, but China was something like the fifth largest mining nation for silver itself. So you can see that by taking on this role, it could quite easily accumulate all the silver that it would need to satisfy the monetary purposes which were intended in the original 1983 legislation. And I believe that's basically what has happened. So China has now got significant undeclared stocks of silver, and it will be, in terms of tonnage, considerably more than what they got in gold, obviously. The parties involved with this were Glencore mainly. The bank would have been JP Morgan, I guess. And the other thing, of course, is that as the silver dory was taken on board, then that needed to be hedged in the futures market. And this is why you had JP Morgan appearing in the market, selling futures the whole time. And as far as the silver bulls were concerned, thereby deliberately suppressing the price. But it wasn't deliberate suppression at all in that sense. It was just part of the whole thing. I think it was intended to hit the price because as far as China was concerned, they wanted to acquire their silver without driving the price up. So I have little doubt that the management of the price was part of this whole process. So are they still doing it? Well, I don't see any reason why they should be still doing it. There may be an argument that they would want to keep the price suppressed because they're a major manufacturer as a nation and exporter of photovoltaic cells and other electronic goods which rely on silver. But that edge is going a little bit. I mean, India's sort of muscling in on the act and all the rest of it. And I think that just controlling the silver price purely for that purpose doesn't actually make an awful lot of sense. So my feeling is that the days of that suppression have probably come to an end. And I would expect, therefore, to see the silver price be freed, if you like, from this sort of suppressive intervention by China. I don't think they're doing it anymore. Which is interesting because it could well mean that as gold continues to go higher, in other words, currency values continue to decline, on that basis, I would expect silver has got quite a lot of catching up to do.
In today's news recap, gold's meteoric rise pauses as investors consider profit-taking. Gold prices have experienced a remarkable upward trajectory since mid-December, culminating in a record high before showing signs of a pullback. The precious metal surged from $2,699.60 on December 18th to an all-time high of $2,974 yesterday, representing a 14.46% gain in just over 2 months. With the current rally approaching the magnitude of last year's advances, market participants have begun considering exit strategies. Commerzbank analysts noted in a recent report that apparently these investors consider the upside potential of gold to be exhausted and are therefore taking profits. They cited the latest CFTC commitments of traders' data as evidence, which showed managed money funds reducing gold long positions by nearly 12,000 contracts. Despite a substantial net long position exceeding 200,000 contracts remaining, this reduction signals potential exhaustion in gold's upward momentum. Market sentiment appears to reflect that gold had become overbought following its recent parabolic surge. However, today's price decline occurs against a backdrop of escalating trade tensions, as U.S. President Donald Trump announced plans to impose a 10% tariff on energy imports from Canada, along with a 25% levy on goods from both Canada and Mexico, America's two largest trading partners. These import taxes, combined with the existing 10% tariff on Chinese imports, are expected to hamper global economic growth and suppress demand. Analysts at Saxo Bank observed that safe haven demand remained strong amid tariff concerns. President Trump confirmed tariffs on Canadian and Mexican imports will proceed, keeping inflation and trade war risks in focus. Now we'll show you more clips of the latest interview, but first smash the subscribe button and check our pinned comment for some massive offers on NordVPN. If you're a serious stacker, this is a perfect fit for you. For less than $4 per month, you can protect your online activity from prying eyes with the most reliable VPN on the market. And believe me, the only thing you'll regret is that you didn't get it 6 months ago. Let's get back into the episode.
There is, I think, growing fears that not only is the economy stalling, but it is going to go into a slump. Now, if that happens, then this budget deficit is going to soar, simply because revenue is going to decline. And while revenue declines, you'll also find that welfare payments and all the rest of it to increase. Government finances are going to be in a huge, great mess. And then put on top of that Trump's tariff policies, that beautiful word, tariffs. And you've got an absolute classic doppelganger for the 1929 to 1932 period, when you had the combination of a bubble bursting, the bubble which was engineered by the Fed, incidentally, under Benjamin Strong in the late 20s. And at the same time, you had the Smoot-Hawley Tariff Act, which was passed in 1929 and then enacted into legislation by President Hoover in 1930. We've got exactly the same thing today. And look what happened in the 1930s. Something like 5,000, 6,000, 7,000 banks went bust, which is why actually, the credit actually contracted, because it just got wiped out. So, with the prospects of that, with a few extra things like, we've got supply chains around the world now, which we didn't have in the 1930s. Breaking those, I mean, they're already being fractured, but breaking those, I think, is an extra dimension to the whole problem. The rest of the world is going to go into a slump as well. The tariffs against Canada and Mexico are reaffirmed this week, and it looks like the EU is also going to be hit with 25% tariffs. This is Smoot-Hawley Mark II. This is the Wall Street crash Mark II. We're talking about a combination of these economic events, which are completely unavoidable, coupled with the collapse of credit. Or if you like, you probably understand this more by calling it the collapse of the value of the debt, because the debt is the other side of credit. That's really what the credit bubble is. It's the other side of debt. So this is going to be a big reconciliation. And anyone who is in credit, I think, is going to, which we all are. I mean, we use credit. We don't use money. We don't do transactions with gold. It's all credit. That is going to be a major, major problem. And I think that the Fed's mandate under these circumstances is quite clear. Don't defend the currency. Try and defend the banks. Stop the banks going under. Stop the whole of the derivative system. We're talking about hundreds of trillions of dollars worth of obligations, which again are debt on one side, credit on the other. Stop them collapsing. You don't want counterparties in those chains going wrong. The whole thing is actually looking extremely dangerous. And that was the whole point of my article, to draw attention to the severity of the situation.
And that's Alasdair Macleod's take on the evolving role of gold and the BRICS nations' ambitious plans to challenge the global financial order. What do you think? Do the BRICS nations' master plan for a gold-linked system hold the potential to reshape the global economy, or are the obstacles too great? Let us know your thoughts in the comments below, and don't forget to like and subscribe for more daily recaps. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.